Okay, now you can read C.
Using straight line method of depreciation, explain the effect on the accounting equation of selling the asset at the end of year 5 for a price of 2,500.
What is the effect? What do you think is the effect?
Looking at the table, the effect is that it's decreasing. The net book value is decreasing every year. Which is accumulating, and the depreciation is increasing. Yeah.
Okay. All right. That is okay. That is okay.
Okay.
Let me do this. Right. So question number C, we need to use the straight line method to explain the effect on the accounting equation of selling the asset at the end of the year. So mainly the explanation should be directed towards the accounting equation. What's the impact of the same on the accounting equation? Okay. So we can just we need to show some table to just show you how the accounting equation is affected. First and foremost, what do you understand by the accounting equation? So obviously, you know the celebrated accounting equation that says that total assets equal owner's interest.
Yeah, owner's interest minus liabilities.
Yes, minus the liabilities.
Or can it be this way? Assets minus liabilities equals to owner's.
So this is plus.
Yeah, that's plus.
Right.
Ownership.
This is the accounting equation. So in short, you are trying to show, when you're explaining, you're trying to show what happens to this equation. How does it change a bit? Okay. So you should be aware that an asset disposal is just the removal of the long-term asset from the company's accounting records. That's disposing of a non-current asset, right? So it is actually a very important concept, okay? Because you know that the capital assets are essential to successive business operations. Yeah. So the asset disposal may be a result of several events. An asset is fully depreciated and must be disposed of. So if an asset is sold because it is no longer useful or needed, then an asset must be removed from the books due to the unforeseen circumstance. Yeah. So that is what usually happens. So let me just show you some table to explain this to you. We start with the year as well. We start with the year. There should be a column for the year. The column now for the assets. The assets and the owner's interests. Let's do this.
And the liability?
Yeah, I'll show them. The owner's interest. So what is the impact of the same? So we'll do this. So we'll have the machine costs. The machine costs, the cost of the asset, accumulated depreciation in this column here for the machine, accumulated depreciation. After accumulated depreciation, actually, you can still have, let's add another column for cash, because you're going to sell this asset for cash. So we can add the column for some cash. Okay, let me just put it like this. The column for cash here. And the capital contributed or withdrawn, that's owner's interest. Now, what capital was contributed or has been withdrawn? If it's been withdrawn, it's a negative value. If it's been added, obviously it's positive, we are aware. Then the last thing what you have is the revenue. Is the revenue minus expenses, less expenses, which is basically amounting to the profit and loss account. You remember how we make entries in the profit and loss account? The revenue, you less expenses, your profit,
Yeah.
right?
Yes, yes, yes.
Yeah. So basically, I'm trying by all the means to present the solutions as your lecturer may desire you to. Yeah,
All
there,
right.
there are several ways of presenting, but we always want to stick to what someone may require you to do. Okay. So
Okay.
the year is year number 5, right? It is
Yeah.
actually year number 5. So 1st January, what happens? You have got an amount. First of all, how have I put the columns? There should be, the year should be this side. We should have the column for writing the details. So let's put the year this other side. Okay, let's put the year here so that here we can write the events or the transactions. Here we can have the column for the transactions, and the last one we can put the year here. So yeah, so the year is number 5, and on 1st January of year number 5, which is the last year, the very last year, okay. We are told that we have got the amount brought down or brought forward at the start of the year. So there is the balance or the amount brought down of the machine. The machine cost was how much? It was 24,000, isn't it? Like that amount at the closing of the year, you have got the value of the machine still, not the notebook value per se, like the value of the machine is still 24,000. That's the cost, because according to the accounting equation, you know that the assets are always quoted at the cost price, right? They're valued at the cost price. Then accumulated depreciation. It was using the straight line method. We found that the accumulated depreciation was 22,000, isn't it?
Yeah.
Yeah, like I'm just reminding you what we did already. Yes, that was our total depreciation. Okay, that is 1st January. Then what happens? The same 1st January, we have received some cash. Let's just say cash collected for sale. Okay, for sale of what? What are you selling? We are selling the same non-current asset, isn't it? The asset, we are selling the asset. At what value are we selling the asset in the 5th year? They have said that we are selling. Okay, let me go back to the question and see.
Or 2,500.
2,500. So we are selling the asset for 2,500 cash. 2,500. That's the cash. Okay.
Okay.
Yes. Then from there,
what's after cash?
what is after cash is capital.
Capital, okay.
Yeah, we're on the other side of the owner's interest, so it's capital, that one.
Okay.
Yes. So we have got cash. Then at the end of it, at the end of the year, like the end of the year, because this is just at the beginning of the year. So the whole year, at the end of the year, you have removed the non-current asset from accounting records. You remove, what are you removing at the end of the year? The non-current asset from our accounting records, isn't it?
Okay, remove NCA.
So when you remove the NCA, it means now we have negative 24,000, because that's a value, that's a cost of the asset. So you remove the entire asset. You no longer have it. Right.
Okay.
Yes. And the value of depreciation is still standing as positive what? Positive 22,000. That's the value that the asset has lost
Okay.
during the 5 years time. Okay. Yes. Now this same cash, obvious, the same cash that we have will be the same amount that we have on the part for revenue minus expenses in the income statement. You'll have this cash, 2,500, the sale of which is the sale of that asset, the cash that you have collected. Yeah, it's just more like the format that is there in the notes as well. Yeah. Then now, what happens at the end of it all? What is the difference now? Let's look at the difference. We have to take the difference. 24,000 plus what?
Negative 24,000, which is 0.
Negative 24,000 plus the depreciation, like in this line, plus the depreciation. Negative plus 22,000. It should give us the amount that remains here in the
Wait,
profit and
but
loss
sir,
statement.
wait, you're trying to first, like, we're gonna add these, yeah, the assets basically, like the. So if we add the first column of machinery, it gives 0.
Yeah, yeah, you are adding the column. You're not really adding the column in this. You are adding the rows. Like we're doing the row. Like for the last one, the end of the year, we are adding the rows, not the column. The row.
The row, okay. So will be
Yes.
negative 24,000 plus 22,000, which
Yes,
is
plus
negative
22.
2,000.
Negative what? 2,000. Which was the net book value that remains after 4 years, isn't it?
Yes.
So what happens? So you have sold the asset at 2.5, but the value of an asset was what? 2,000. Are you following?
Yeah.
The net book value of the asset was 2,000, but you have
1,000.
managed to sell it at
2,500.
2,500, which means you have what? You have gained, right? There is a
Again,
difference.
500.
Yes, there is a gain of what? 500 kwacha. Sorry, not kwacha, pounds.
Yeah.
Right. So there is that gain. So if you are to summarize the statement, first of all, have you gotten this? Like should just be like this, like a format, because mainly in accounting we follow formats. You understand?
Yeah.
We don't do things the way how we want, but there are those formats that are designed by International Accounting Standard Board, where they regulate that, maybe the profit and loss statement should look like this, so that they can be actually uniformity. Because if people can just wake up like maybe in other course and write the way how they want, we would have been having confusion in accounting, you get? Because if you write your balance sheet or your income statement is not the one that I know, it means that there will be no communication. You understand? You
Yeah,
prepare
someone
as an
may
accountant.
misunderstand.
Exactly. So get it that in accounting we follow formats. It's just the format that has been agreed upon. They have agreed that, okay, let's be writing them like this. So even this one is just a format. Don't even panic very much. Say, okay. So if you have the different figures, you just put in the figure into this table again, just like that. It should be coming out like that. Just
Okay.
understand what sits where. Okay.
Yeah. Yeah.
Understand what sits where. What do we put here? What do we put there? That's all. I think that's what we need to understand to get in the meantime. Is that right?
Yes, sir.
So now, what is the effect of this, of the disposal of this asset, especially to the income statement? What do? You debit. You're going to debit the what? The cash. Okay. You debit the cash account. With how much? 2,500, isn't it?
Yeah.
That's it. The money that you sell the asset. At the same time, you will debit the income statement with the depreciation, accumulated depreciation, the 22,000. Is that right?
Mm-hmm.
Yes. The 22,000 is the debited. And why are we debiting the 22,000? This is because you know that depreciation is an expense, isn't it?
Yeah, because you are losing you're losing the money basically.
Yes. So all expenses have a debit entry in the income statement. That is what was established last time, isn't it?
Yes.
You know that all expenses be debit. So that's why I'm trying to explain to you why it is it's debited. Then the gain now,
Mm-hmm.
the gain on the sale of a non-current asset is credited. Why? Because it's an other income. So there are other incomes in the profit and loss statement. If you remember, there's a part where we put other incomes, right?
Yeah.
And we said that what elements do you need to credit in the general ledger? You credit all the what? All the liabilities. You credit all the incomes, the other incomes, isn't it? You
Yeah.
credit capital again. So you credit capital, liabilities, and other incomes. Then what do you debit? You debit all the expenses, isn't it?
Okay.
Yes, you debit the expenses, and after debiting the expenses, you debit all the assets. All the assets have a debit entry. And what else do you debit? The losses.
The losses as well. Okay.
Yeah, whereas a gain is what? A gain is credited, but the losses are what? Are debited. That is very important for you to understand.
Okay.
Did you get
Yeah.
what I said? I should go over
Yeah,
it again.
I'll try to I think I just have to process this a bit more.
Yeah, let me go through once more.
Okay.
When you go in the income statement, right?
Uh-huh.
In the income statement, we put the elements, the way how they appear in the trial balance, the general, right? And
Yes.
in the trial balance, you understand that the following elements are debited. Let me show you what is debited, doctor. We say that what is debited are all the expenses, right?
Okay. Hold on, let me write it down. Debited.
All the assets and all the losses. Right
All
down.
the expenses.
All the assets
All the assets.
and the losses.
All the losses.
That's why if you check your trial balance, you find the accounts such as the cash account, all the assets account, they'll be on the debit side.
All right.
Haven't paid attention to that one. You will find it if you go through. Just try to get any of the trial balances. You just look at it, the one that is already prepared. You can understand that all expenses actually as well, they will have a debit entry. And all assets, they will have a debit entry. All the losses or non-current assets, they'll have a debit entry. Is that right?
Yes.
Yes. So that is the impact. Then what is credited? What is credited is number one, all the incomes or the gains, right?
All the incomes.
All the liabilities,
All the liabilities.
all the owner's interest
All the
or
owners.
capital, you may call it. All the elements that form the owner's interest are credited. Is that right?
Yes.
Yes. That one you've managed to get it, isn't it?
Yes, sir.
So now that is what you needed to explain. So when they say, can you explain the impact? You're just telling us what is debited or like which account will be debited in the profit and loss account. Because the
Okay.
question is asking you to show the effect on the accounting equation of the disposal of that. So you show what happens. Yeah. So we are saying that the cash account, okay, is debited, right?
Okay. Yeah, because it's
The
cash is
income,
an asset.
exactly. Cash is an asset.
Yes.
Then depreciation, total depreciation is debited as well because it's an expense, right?
Yes. Depreciation is also an expense.
Debited.
Yes.
Mhm.
Then
On the other hand, now we credit the 500, which is the gain, all the gains on the sale credited.
the income
Okay.
basically.
Yeah. And the cost of the machine is credited as well. The cost of the machine is credited too.
Which is the owner's under the owner's interest as well, yeah? The cost of
Yes.
okay. Yeah, this is much more clear.
You've gotten it now?
Yes, perfect.
Yeah. So that's what happens. Any question?
But I had to like explain in terms of the effect.
Yeah. So the question is asking in terms of the effect. So just show that this account is debited, this one is credited, this will be debited, this will be. That's what you need to show us. That is the effect.
Okay.
Right.
All right.
Mm-hmm. So now, going back to the question,
Mm-hmm.
has the question been understood?
Yes, sir.
Okay, good girl. Now, use the straight line method of depreciation. Explain the effect on the accounting equation of the disposal of the asset at the end of the year for a zero scrap value.
For a zero.
There is no scrap value now.
Okay.
Mm-hmm.
Using the
What
straight
happened?
line of depreciation, explain the effect on the accounting equation of disposing of the asset at the end of year 5 for a zero scrap value.
Mm-hmm. So you are just repeating almost the same thing.
Okay.
Since we are still using the same straight line method, but where there was that part where we put the scrap value, okay, you put 0.
So instead where the 2,500 was, it will be 0.
Yes, that's sale, the sale part. So in short, it will just be like this. Here, you just put 0. You're following?
Yeah.
0. And this one 0. All other things will remain the same. Right? We are still using the same method. But if they had said use the reducing balance method, you'd have used the depreciation from reducing balance method. You remember that the total depreciations are not the same, the accumulated one. So that is what you could have. Otherwise, everything would have remained the same.
Okay.
That is the only difference. Then you can now tell us the effect. Start with what we debit. How much are we going to debit the cash account?
0. There will be no debit.
So there will be £0. There are 0.00 pounds will be debited. Accumulated depreciation?
22,000.
22,000. Okay. 22,000.
Loss will be 0 as well.
Yeah. So now the loss, what will be the loss? The loss is what? The loss is debited, isn't it?
Yeah, it's debited.
Yeah. So it is the all loss. We have not sold it at, we have sold it at 0. Have you seen? Like
Yeah, so
it's
we
more
are
like they
going
have
to have
not
a
paid
loss.
anything. Sorry?
We are going to have a loss, yeah? The basically you haven't gained anything.
Yeah, so you have the loss of what? 2,000, isn't it?
Okay, 2,000, yeah.
Yeah, because you know when you are disposing this asset, these people who got it, they didn't give anything. You
Yeah,
understand?
but even if you look at the expenses part, we are left with just a negative 2,000, which shows as a loss.
Mm-hmm. So we remain with nothing.
Nothing, yes.
It's a loss, it should be debited. What
Okay.
else happens? You credit the costs, which is what? 24,000, right? The cost of the machine. And you're fine. Is that right?
Yes.
That is the effect.
Okay.
Mm-hmm. Any question?
No, sir.
There is no question, sir. We're understanding. It's only that you are speaking so fast
No, I'm understanding.
and we are unable to hear what you are saying. Hmm?
No, sir, I can
So
hear what.
you can hear what I am saying, right?
Yes.
All right. So basically, you need this understanding. Okay.
Okay.
You need that understanding. So sometimes they can tell you that now the scrap value was less. Imagine now you have the scrap value, which is way less than the net book value. Obviously, the entries will still be the same since the scrap value will be negative still, right? It will give you, like, you have the negative value still if the net book value is still higher than that. So it means that the entries are still going to be the same. You understand, right?
Yes,
But
sir.
the key message is, in case you find that it is said, use the reducing balancing method. Please, there is nothing fancy, nothing difficult. The same format. What you just change is what you put on what? On your depreciation.
Yeah. We put
The accumulated depreciation.
of your 5.
Mm-hmm. The accumulated.
21,999.42 will be there instead of
Exactly.
1,000.
That is the only thing that is going to change. Otherwise, the rest of the things shall remain the same. Okay?
Yes.
Mm-hmm. Any question?
No, sir. I understand.
Upper there is no question. The person is understanding. As we do the as we now do the recap of this, look at this. Um, right. Okay. So just a minute, and I try to check what is this. Check if there is any part that has been omitted. Oh, these were the solutions that were prepared for you, right?
Yeah.
Can go through over them as we cement this understanding.
Okay.
So, so with this one, it was just saying that when it was time to outline the difference between the tangible non-current assets and the intangible non-current assets, non-current asset investment, you just need to go to the notes,
Yeah.
and that is what is there, and then you will be fine. Then on question number 2, it was saying that when an item of a tangible or non-current asset is sold, why does the net book value of the non-current assets not always equal the proceeds of the sale. So it was said that it is because of what? The asset valuation policy says that the net book value should equal the cost of the asset minus accumulated depreciation, of which that is what you answered already in your explanations. You were able to follow through. Then there was this question number 3. You were asked it was about a food processing company purchased on 1st January year 1 a canning machine. So the machine cost 24,000 and it was estimated to have 5 years with the resale value of 2,000. And so the required was to prepare a table of depreciation charges and the net book value over the 5-year life using the straight line method. And this is what happened. Exactly, we explained that it should be the cost minus what?
The cost minus the how can I say it? The total depreciation, basically.
Cost minus total depreciation gives us the net book value.
Yeah.
Right. So what did we say? I like you always going through again the work that we have done. Yeah, that's when I ensure if people have been following.
Are you
How do you
asking
calculate?
question?
Yes, I'm asking.
Okay. Yeah, ask. You can ask.
I'm asking that how do you calculate for depreciation using a straight line method?
The formula, basically.
Right.
The formula, yeah. Cost. It's cost minus the estimated scrap value or residual value divided by the expected life.
Yes. She has gotten that one. And we said, yeah, what happens to the depreciation of an asset, especially when you're using the straight line method?
It remains the same.
It remains constant, right? Throughout the whole year. So and basically this is what we were doing using a straight line method. Okay.
Yes.
Maybe the only part that I haven't yet commented on is the use of the revaluation method. Maybe just before we proceed with this, let me show you something about the revaluation method. You just heard, but you didn't hear how to calculate, isn't it?
Yeah.
So with this one, it is actually the cost of the non-current assets at the beginning, right? Minus the value of an asset, of course, the non-current asset at the what? At the end of the period in question.
So
you get it, right?
Cost of non-current asset
at the beginning.
Minus
Plus the value of an non-current asset.
Value of non-current asset at
the end. For example, you get this machine, 24,000, right? Then at the end of 1 year, they value it. You know, asset valuation, even business valuation is something that you commented on at the beginning.
Okay.
Yes, there are some people that are trained to value, the accountants are able to value these assets. So they value the assets and have found that actually the value of an asset maybe after 3 years is what? Is 21,500. Okay. So that would mean that total depreciation would be what? 4,500. Is it 400? No, it should be 3,500, right?
Mm-hmm.
3,500. Then if you want per year, you can divide by the number of what? The years so far.
Okay.
Okay. Then in terms of the treatment, it is treated like the sweat line. You get what I mean, eh?
Yeah.
Yes, by treating it like the straight line method, which would mean that it almost it remains the same. Like when you find that per year, means shall be the same, just like that.
Okay.
Yes, in case you have such, that is how you actually go about that. You don't even panic. You don't worry about anything. Is that clear?
So,
And actually, valuation principles are very, very important. I'm sure we'll reach at that point, but in the meantime, not for this test, of course.
okay.
Yeah, for something else. You need to train how to value these assets and how to value the businesses as a whole. Which is a lot of work. Because even just valuing one asset, it calls for a lot of information and data. But now you can still value the entire business and revalue the entire business. So the whole idea behind valuing these assets or the businesses, we know that they gain in value with time. For a business, as many people get to know about the business, then the business will go on demand. You get it, the brand name will start spreading just
Mm-hmm.
like that. And so the value starts appreciating. So
Yeah,
now
so
there is need of someone to come and value
value it. So
the
this
asset.
is
Mhm.
these methods are they are like taking account of the depreciation. How about if this same machinery increases in value?
Bruh, interesting. Do we have any machine that can increase in value? According to the accounting standards,
Uh,
right? IAS should
uh,
be somewhere, should be 32 for the one for assets, for non-current assets.
uh,
It says that all current assets or all non-current assets, such
mm,
as machinery, motor vehicles, and others, they depreciate apart from what? From buildings. And not from building, from land,
uh.
even the
Yeah,
buildings.
exactly. What if your land up? Okay, but so what if there's a scenario of, let's say, there's a shortage of this certain machine in an industry. Let's say in a restaurant, this specific griller is on shortage, and the people can't find it as much. What if
Mhm.
one can appreciate the value of the griller?
Oh, I get the question. Now, like you buy the evaluation that we are trying to say, remember the accounting concept. There is a
Mm,
concept that we say that the non-current assets are always quoted at what? At the cost price, isn't it?
yeah.
The only thing that can affect them is either depreciation,
Mm,
okay, depreciation of that asset. So if for example, the depreciation could be as a result of maybe it has fallen down, or it has been broken, or maybe due to economic value, such as people like change in preferences and tastes of that asset, they have lost in value. But I get that point whereby there is just a shortage of demand, but we may not really say the shortage of demand is appreciation in value of that. Because
Okay.
the value of an asset will remain the same. What has just gone down is just the
Right.
supply.
Yeah, okay, yeah. Yeah.
You know what it means to go up in terms of demand? What would not demand, sorry, the value. It
Mm.
means that even if more people were to come and supply,
Yeah, it would have been the
you
same.
because like the value should be intrinsic. It should be inside. It should not be affected by,
External
you know,
source.
exactly. That's what you're trying to mean. Because for that one, for Grilla, what will happen is that what if after 1 month, many people come and supply more? And again, the
Yeah.
price drop. You get, so you cannot say it has appreciated or what. No.
Okay.
Do you get what I'm trying
Yes, sir,
to say?
definitely, definitely.
So
Makes
for
sense.
land does appreciate. It
Okay.
appreciates. So that appreciation, instead of decreasing it, you add it. You do the opposite entry. It's the opposite of depreciation.
All right.
The treatment is that you do the opposite. You add.
You add it, yeah. For land, yeah?
Mhm. Yeah, for land, land appreciates. So it is revaluated every time. So the value that you write is called the revaluation value. Yeah, the revaluation value. So you see that the asset has gained in value, and then you write. Is
Okay.
that right?
Yes, sir.
Is there any question?
No, sir, I think it's quite clear.
You have understood?
Yes.